Hey, Jordan from Precondo here. Canada's population just cracked 40 million, so we're going to talk about how that might impact the housing market in the coming future. Now, obviously, we have a massive country and we have an aging population. So generally speaking, most people would view this as a great thing. The consideration when it comes to housing, though, is that, of course, most immigration tends to come to one of 3 or 4 places, Toronto and the GTA as a whole being the predominant destination for new immigrants. Now, again, we have a lot of land, so this isn't an issue. We can just build new homes for the population growth. Well, the problem is that housing starts are actually starting to slow down. So if you look at the housing start data from CMHC, you can see that our housing starts right here are headed towards basically the lowest level since 2015. And of course, our immigration targets today are much, much higher than they were in 2015. I have seen some comments on Twitter from people who say, well, these are just greedy developers land banking. But the reality is, unless you can sell, you can't build, right? You have to hit a certain sales threshold as a developer to get construction financing and to build the homes. But right now, because of where interest rates are and because of how unsure investors are on the future of the market, there's far less people buying these pre-construction homes. And so as a result, well, less are getting started and less will be built and less will be delivered in 4, 5, and 6 years. And this is a bit of an issue because we are already undersupplied. If you look at the G7, we have the lowest housing units per thousand per capita, and that is for Canada as a whole. But if you zoom into specific provinces, you'll see that Ontario and Alberta are the most lacking in terms of housing supply. Simultaneously, they're the 2 fastest growing areas. Now, I've shown this chart in a previous video, but I want to show it again. I spent a lot of time making this chart. I think it looks great. And also, it's super relevant to this issue. So if you look at housing completions in 2022, we built 5,400 detached homes, 3,800 semis and townhomes, and just shy of 20,000 condos. Based on the persons per household multiple from Statistic Canada, so, based on those housing types, how many people on average live in each dwelling type, you can extrapolate that last year we built enough housing for about 66,000 people. So we built enough housing to see our population grow by 66,000 people. Well, the issue is in the GTA, our population actually grew by 147,000 people. Now, obviously, interest rates are going up or have been going up over the past year. And as a result, housing prices have been correcting downwards a bit. But when you really look at it, housing prices haven't corrected enough to offset the rate increase or the debt service cost. And so this report from RBC really makes it clear that affordability has gotten worse, not better. Of course, your down payment has gotten smaller. And the adage goes, you date the rate, marry the price. But the reality is that it's far less affordable today to purchase a home than it was the peak of the market. So I guess the point I'm trying to make here is, despite the fact that Toronto and the GTA is a highly levered market, it has done reasonably well in the last year, right? And I think part of the reason it has done well relative to rate hikes is, of course, the fact that we're just not building enough homes for the increase in population. And I understand that some people will make the argument, well, new immigrants don't come and immediately purchase a home, so they have no effect on the housing market, which has always been an unreasonable argument to me because it's like, well, they're not living on the streets, so they're renting a place. And if you're increasing the amount of demand for rental units, well, you're pushing up rental prices. And if you push up rental prices, you push up returns. And if you push up returns, more investors are interested in the market. They push up the prices. So it's kind of like whether it's occupied by a tenant or an owner is more or less irrelevant. All that matters is you build enough housing for the people that you're bringing to your country. And you can really illustrate this further. I mean, if you look at the inflation adjusted index price of all the G7 countries for their housing market, you see that Canada is a standout. It's done remarkably well. In fact, Australia actually looks somewhat similar to Canada, but it's obviously not on this chart. So you ask the question, okay, what's going on here? Well, earlier in the video, I showed that we have the lowest housing units per capita. And then furthermore, if you look at the population growth out of the G7 countries, we are the fastest growing country from 2016 through 2021. And of course, our immigration targets are higher now, so we're growing even faster still. So what I'm getting at in this video is, I don't know how this ends, right? I can't tell you the short term of the market, but what I can tell you is that if we continue at our current rate of population growth and we continue at our current rate of home building, in fact, it looks like home building is actually coming down, we're going to have a serious problem. We think affordability is bad today. Just give it 10 years. That's it for this video, guys. Hope you found it useful. Please like and subscribe, and I will see you next week.